Hi there, good morning. You're watching a fresh episode of Market Cafe. It's a brand new trading day and thanks for choosing to start your day with us. This is ET Now and I am Snehi Shah, and with me as always is Shreyansi Singh. Now this is a show where we're going to take you through everything that's been happening in the world post-market close yesterday and while we've woken up today morning, and everything that's been happening overnight in India as well as globally. And in the second half of the show, we'll also take you through all the stock-specific action we saw yesterday and the ones that you should be prepping for today, the stocks you should be keeping on your radar, as well as what brokerages are flagging off for us bright and early this morning. With that, let's kickstart the show then. And Shreyansi, well, lots to talk about when it comes to the global handover. You have US CPI, you have the FOMC outcome, and look at what that has done to US markets. There is really no stopping for S&P, is there?
Well, absolutely, S&P and Nasdaq both, because Dow clearly is the only outlier at this point. So when you take a look at futures, though, you're not looking at much of a move there, because S&P 500 as well as Nasdaq 100 futures were marginally up, and Dow on the other side, like I mentioned, was the outlier here as well. So fell about 0.1% on a futures basis. But then when you look at the strong session that we had, right, you're looking at S&P 500 as well as Nasdaq eking out some gains, with each benchmark hitting all-time highs as well as closing at records. So that's the kind of move that you're seeing when you take a look at the broader market index. You're looking at 0.9% gain coming in there. And when you look at Nasdaq, then you're looking at 1.5% of a gain coming in there as well. Now, Dow on the other side was the outlier, closing down slightly, marginally lower. 0.1% decline is what we saw for Dow then. And when you take a look at what investors were looking at, investors were optimistic after the central bank acknowledged that modest further progress had been made towards its 2% inflation target, even as it kept interest rates unchanged. We'll be talking about it later as well. And you, of course, had the May's cooler consumer price index print that also added to hopes that inflation was indeed easing. So those are the couple of things that we saw play out in the US market. Let's also take note of what happened in Europe as well, because European stocks closed higher. So whether you're looking at a stock 600 index or you're looking at DAX as well, you're looking at gains on both these indices. So stock 600 ended the session up over 1%, and when you look at DAX as well, 1.4% is the kind of gain that we saw there as well. So Snehi, that largely is the global handover when it comes to equities. But let's also take a look at oil, because quite some strength that we're seeing there as well.
Absolutely, lots of good stuff happening in oil. Those oil prices were up almost 2% yesterday intraday, but we've seen some sort of a pullback, and we'll get to that as well. Now, crude oil futures rose Wednesday as traders bet on tightening supplies later in the year. The Fed Reserve's indication of just one interest rate cut this year and bearish US stockpile data limited these gains. And the Department of Energy sees global demand rising this year by 1.1 million barrels per day, up from a previous forecast of 900,000. The increased demand implies a supply deficit, with world production expected to rise 800,000 barrels per day in 2024. Oil prices gained nearly 2% earlier in the day, but pulled back after the US reported a 3.7 million barrel rise in crude oil inventories for last week, compared to analyst expectations of 1 million barrels drop. What's interesting to note is the move that we saw coming in gasoline as well, because gasoline stockpiles rose by 2.6 million barrels compared to just 891,000 expected by analysts. So big chunk coming over there. Fuel demand increased by 95,000 barrels per day to about 9 million barrels per day total. Daily average fuel demand has been tepid, or 1.5% lower compared to the same period last year, despite the start of the summer driving season. Oil pulled back further after the Fed Reserve indicated that there's only one interest rate cut in store this year, as opposed to a forecast of 3 cuts as recently as March, citing modest progress in capping inflation. So those were the moves when it comes to your oil benchmarks. You had WTI at $78 per barrel, down 0.5%. On the flip side, you have Brent still firmly above $80 a barrel at $82.2 a barrel is where Brent is at, also 0.5% lower. What's interesting to note is the move that has come in gold overnight, because gold prices have pared gains yesterday after the US Fed Reserve has indicated there's only one rate cut in this year, citing still still elevated levels of inflation. Spot gold climbed 0.3% earlier, but it is 1% lower as we speak. So very strong moves coming in gold as well. At $23.30 per ounce is where your spot gold is at, Shreyansi, right now.
Well, absolutely. And let's also take stock of important commentary coming in and news coming in this morning. In a largely expected move, the Federal Reserve held benchmark lending rates in the current 5.25 to 5.5% band. However, the central bank revised its outlook for rate cuts to just one in 2024 from the previous one, which was three as early as March. And when you take a look at central bank policymakers, they also noted that there has been modest further progress toward its 2% inflation objective. And in terms of commentary, then Chairman Jerome Powell also noted that the central bank does not have the confidence yet to cut rates, even as inflation has eased from its peak levels. Additionally, he also said that it is unclear why the sentiment of everyday Americans is so sour on the economy. And he also, despite a cooler than expected inflation print, the central bank had also refused to rule out the possibility of rate hikes. However, added that hikes were not the base case for anyone on the committee. So that's the commentary coming in. Let's also listen into exactly what else he had to say then.
The committee decided at the meeting to maintain the target range for the federal funds rate at 5.25% to 5.5% and to continue reducing our securities holdings. As labor market tightness has eased and inflation has declined over the past year, the risks to achieving our employment and inflation goals have moved toward better balance. The economic outlook is uncertain, however, and we remain highly attentive to inflation risks. We've stated that we do not expect it will be appropriate to reduce the target range for the federal funds rate until we have gained greater confidence that inflation is moving sustainably toward 2%. So far this year, the data have not given us that greater confidence. If the economy evolves as expected, the median participant projects that the appropriate level of the federal funds rate will be 5.1% at the end of this year, 4.1% at the end of 2025, and 3.1% at the end of 2026. But these projections are not a committee plan or any kind of a decision. As the economy evolves, assessments of the appropriate policy path will adjust in order to best promote our maximum employment and price stability goals. If the economy remains solid and inflation persists, we're prepared to maintain the current target range for the federal funds rate as long as appropriate.
Although that's the word coming in from the Fed Chair Jerome Powell, but let's keep it going with the US. The CPI print for the month of May held flat, although logged an increase at 3.3% on a year-on-year basis. Excluding volatile food and energy prices, the core CPI increased 0.2% on the month and 3.4% from a year ago. Price increases were held in check, though, by a 2% drop in the energy index and just a 0.1% increase in food prices.
Well, absolutely. And meanwhile, back home as well, India's retail inflation eased to a 12-month low of 4.75% on an annualized basis versus the 11th-month low of 4.83% in April. When you look at food inflation as well, that eased to 8.62% from 8.75% in April, but has remained higher than the 3.3% mark registered back in May last year. When you look at vegetable inflation, that moderated to 27.3% year-on-year versus 27.8% in April, and the inflation print largely backs Governor Das's view of inflation moving towards the 4% target. But remember, he did also add that the central bank wants the process to be gradual and take place on a durable basis. In fact, we also caught up with Saugata Bhattacharya, independent economist, as well as Kanika Pasricha, Chief Economic Advisor of Union Bank of India, to decode India's May CPI print as well. Listen into what they had to say as well.
The base effect of slightly rising inflation in the next 3 or 4 months is going to keep, assuming that rains are more or less normal, that there will be some relief on inflation. There will be a very large base effect in the month of July, where inflation had spiked. So one thing that I want to point out is my sense that the RBI's own forecast of 4.9% average for the first quarter inflation is likely to be overshot, likely to be undershot. That is on the higher side. My own guess is in the CPI inflation for Q1 will be 4.7 odd percent, somewhere around that figure. So we will not see a very high growth, but the other factor that we will see in inflation is that the core sector inflation core inflation is going to now steadily move up because of the base effects. It had come down significantly last year. Now it will begin to move up. So we are now close to the bottom of core inflation.
Core inflation was at 3.2%, 3.2, 3.3, but core has actually eased to 3.1%. So it's actually food inflation higher than expected on the headline in terms of the rural-urban breakdown. It's the higher food inflation that's kept rural inflation more elevated.
All right, well then, shifting focus to an interesting note coming in from Morgan Stanley this morning, wherein they expect bond markets to benefit if Joe Biden is re-elected on the back of those tax hike plans to offset government spending. However, it believes that under the scenario that Donald Trump were to win the elections, it would be better for growth but worse for bonds.
Well, absolutely. And moving away from macros and lending on the spotlight on stocks then, FedEx has announced layoffs anywhere between 1,700 and 2,000 in its European back offices, and move comes amid latest push to cut costs as the parcel delivery giant combats a slump in freight demand. Meanwhile, US car maker Ford has also said that it plans to cut a further up to 1,600 jobs at its assembly plant in Valencia, Spain, after announcing a reduction of 1,100 staff last year as well.
Alright, and according to global ranking firm Kantar, Apple has become the first brand to cross $1 trillion in brand value, a 15% jump from last year, while chip maker Nvidia's value has nearly tripled. The iPhone maker retained its crown as the world's most valuable brand for the third straight year in 2024, followed by Alphabet's Google at $753 billion and Microsoft closely following at $713 billion. With a market cap of $3.18 trillion, Apple is ahead of AI chip powerhouse Nvidia at $2.97 trillion as well.
Well, absolutely, and let's shift the spotlight to the G7 meeting of advanced economies then. That is all set to start today, and PM Modi is expected to pay a visit to Italy as per the communication from Foreign Affairs Ministry. What does it exactly signify for us? Sumita Karir is standing by with that snapshot. Sumita?
G7. In Apulia in southern Italy, the stage is set for a mega gathering of some of the world's richest countries, including Canada, Japan, UK, US, Italy, France. The summit starts today and ends on the 15th. Now, this year's backdrop of the G7 meeting is rather interesting. Europe is experiencing political churn. The United States is approaching elections as well. And then there are wars and conflicts, still showing no signs of ebbing. Interestingly, this is India's 11th participation, Prime Minister Modi's 5th consecutive participation, one that comes immediately after he assumed office for his third term. Now, India's continuous participation signals increasing recognition of the country's significance in matters of global concern. India, as the fifth largest economy, will get an opportunity to follow up on the outcomes of the G20 summit, including the issues of global south and the Russia-Ukraine war, along with the war in the Middle East. But what's really on the agenda? Well, number one, there will be discussions around addressing the ongoing wars, considering G7 imposed large sanctions on Russia. Number two, combating illegal migration, Africa, climate and energy security, and most interestingly, AI and the opportunities and challenges that it presents. Additionally, China remains a significant topic of concern as well for leaders to address the country's industrial overcapacity and its economic impact. Now, we're already seeing sanctions being imposed on Chinese imports by the United States. We'll have to see how those decisions really benefit India.
Alright, let's shift focus back home and let's get you the latest on the Kuwait Fire incident that claimed the lives of at least 40 Indians. PM Modi chaired a meeting last evening to come up with a redressal plan. It was decided to provide an ex gratia relief of 2 lakh rupees from the PM Relief Fund to the kin of each Indian victim. More than 50 people sustained injuries in this incident, which took place early morning when the blaze broke off in one of the lower floors of the residential apartment in the Mangaf area of Kuwait's southern Ahmadi Governorate. My colleague Rishabh here with more details from the Times Network. Rishabh, take it away.
The MOSMEA is going to Kuwait to oversee the on-ground assistance that the Indian Embassy as well as the Kuwait authorities are doing, and also to arrange early and earliest for that matter repatriation of the mortal remains of those 40 Indians who have lost their life in this tragic incident. Kuwaiti government has, has started the investigation. They have launched a probe. The lookout for the owner of the building is on. As of now, the report suggests that the owner of the building was the owner of the company where these 40-odd laborers were working. And this building, for that matter, housed 196 total laborers, while the capacity of the building was hardly 100.
All right, thank you so much, Rishabh, for getting us that somber news and update then. But moving on then, 2 more states have been added to the BJP's kitty. Odisha and Andhra Pradesh. TDP chief and NDA ally Chandrababu Naidu returns as CM in Andhra. And BJP also managed to defeat long-standing BJD in Odisha. At the same time, in the recently concluded general elections, BJP managed to open its account in Kerala as well, with 1 seat and 8 seats in Telangana. Meanwhile, Congress's Rahul Gandhi is in a dilemma about his 2 Lok Sabha seats, Wayanad as well as Rai Bareli, that he won and that he contested and won from by a margin of more than 3 lakh votes on each seat. So that is something that is important to take note of, that we just covered with the political landscape.
Now, I have a dilemma in front of me. The question is, will I be Member of Parliament of Wayanad or will I be Member of Parliament of Rai Bareli? Unfortunately, like the Prime Minister, I am not guided by God. I am a human being.
All right, that's the word coming in from Rahul Gandhi. But on that note, we'll slip into a very short break on this edition of Market Cafe. When we return, we'll take a look at how the Asian markets have opened up this morning. So you stay tuned. We'll be right back. So much for staying tuned. Let me take it to the insurance space, and the IRDAI has asked insurance companies to offer a surrender value from the first year itself, a move that could impact their margins. The regulator issued a master circular which mandates insurers to pay special surrender value after the first policy year, provided 1 year's full premium has been received. My colleague Anurag Shah is joining us right now on the phone line with all the details. Good morning, Anurag. Take it away.
Yeah, so in IRDA's master circular, there's a mention about the increasing in special surrender value for life insurance policy after the completion of 1 year, which means that special surrender value, and IRDA has also come up with a formula that special surrender value has to match with the present paid up of sum assured and the future benefits also, paid up future benefits. So that will impact the margins of life insurer, because by the increase in special surrender value, overall surrender value will increase, and policyholders will get more surrender value if they are giving up their policy before the maturity. For the calculation of special surrender value, interest rate cannot exceed the benchmark would be 10-year GSEC yield with a spread of 50 basis points. So that cannot exceed the 10-year GSEC yield. That has also been mentioned in the master circular. And the purpose of master circular is that the policyholder should have the complete transparency about the guaranteed surrender value, special surrender value, and overall surrender value. So in the policy document only, during the benefit illustrations, all insurance companies will have to mention it, the amount of guaranteed surrender value, special surrender value, and the date of implementation also has been mentioned in master circular. So all the existing product need to be withdrawn or modified before 30th of September 2024. So new rules will be applicable, mandatory for life insurance company effective from 1st October 2024 as per master circular. Remember that in December 2023, IRDA come up with a draft proposal in which surrender value was increased substantially, and after that, there was a resistance from the life insurer. They were opposing it, and the final notification came in March 24, that has made not major changes, but once again in a master circular, IRDA has increased the special surrender value, which will increase overall surrender value for life insurance policies. Other than that, there are few points also mentioned in the master circular, which include that policy loan facility in all insurance saving products will be given by the insurers. A free lock-in period is extended from 15 days to 30 days. Partial withdrawal under the pension product will be permitted to the policyholder. So major changes has been described in the IRDA's master circular. And most important one is the increase in special surrender value, in which policyholders will be benefited, but margins of life insurers will be impacted.
Well, absolutely. Thanks, Anurag, for joining us bright and early this morning to tell us about all of that happened. And this is definitely a move that could also impact the margins as well. So we'll see how that pans out for the life insurance companies. But moving on, then my colleague Aishwarya Patil caught up with K. Ravichandran of EVP and CRO of ICRA. And he also says that amid ongoing speculation, it's anticipated that infrastructure spending will maintain its momentum. Furthermore, he also added that government's potential shift towards rural infrastructure could also offer a much needed boost to distressed areas. Listen into a slice of this conversation that she had with him.
We believe, infrastructure spend will continue at the current pace, while there has been a lot of discussion around, providing stimulus for the, rural and, lower strata of the society because of the distress being faced by them. While certainly there could be priority for the, government. Infra spending is something, is here to stay. Perhaps over the medium term, the government outlay may moderate at the current level, and private sector, may be asked to, pick up the tab. It means they will have to fund, from the market, bond market as well as the the equity market as well as the bank loan market. But overall infra spending per se, if one is looking at, I don't think there will be any slowdown in spending. Just that mix could be changing slightly, since the government would also have its fiscal consolidation priorities. To the extent that they may not have unlimited bandwidth to continue with the financing.
So in any particular pockets, you see any changes or some sort of push that the government might make this time around in terms of the infrastructure sector overall?
Infra, I mean, already, in terms of budget outlay, there is a minor moderation. I believe in the final, budget, there may not be material change, compared to what we have seen in the interim budget. Otherwise, with regard to road and, railways and, defense spending, etc. So these are the three major sectors where, government has been providing a good amount of capital, a good amount of outlay. I'm not looking at any material reduction for the current year per se.
In terms of finance in the infrastructure projects, do you see that picking up?
Yeah, so with regard to infra financing, today, the PSUs have been playing a very important role, PSU banks and NBFCs, I mean. While the private sector, NBFCs, infra finance companies have been scaling down their,
All right, that was K. Ravichandran of ICRA in conversation with my colleague Aishwarya over the entire outlook on infrastructure spending by the government. But viewers, on that note, we'll slip into a very short break on this edition of Market Cafe. We'll be right back with more stock-specific news and action, so you stay tuned. Nykaa will be in focus on the back of its management meet. The newer personal care categories like serums and sunscreen are growing at 100%. Jefferies as well as Morgan Stanley are bullish and maintain their stance as well. Vinny is standing by with all of those key takeaways. Vinny?
Yes, absolutely. So management meet highlights that have come in from two brokerage notes for Nykaa, that is Jefferies and Morgan Stanley. When we're talking about it, Jefferies maintaining a buy target price of 220 rupees per share. BPC segment for the company, that's offering a significant headroom of growth for Nykaa, given that there's an increasing user awareness that is driving the growth for the beauty personal care segment. Fashion, that's a niche play, a premium category play, and the market is also seeing a bit of a growth there, but yes, still a smaller play that comes in for Nykaa. Other than that, they see a clear need among customers who are value conscious and not just seeking discounts. So more value is what customers are looking for, and that is where, you know, maybe they will start focusing a bit more on. And BPC margins, that should remain a range bound in the short term, as growth is going to be the priority. That's the word on coming from Jefferies on Nykaa. Other than that, what Morgan Stanley is highlighting when they spoke to the management, new personal care categories like serum, sunscreen are growing very fast, 100% rate. Home-grown brands are at a peak in terms of the contribution, that's at around 16 to 20% in the gross merchandise value, and competition that's continuing in and remaining high in the quick commerce segment. That's the word that's coming from Morgan Stanley when they spoke to Nykaa. Quick commerce, clearly that pressure is building onto that, and too much inventory is also there, something that they're watching out for. But yes, Nykaa surely going to be in focus on the back of brokerage notes.
All right, Vinny, thanks so much for taking us through why Nykaa is going to be a buzz in today's trading session. We're going to keep a close eye on that stock particularly today. But moving on, let me take it across to my colleague Ansh, who's joining us with an FNO snapshot of what's expected for the derivatives to look like for the day. And Ansh, Nifty expiry today, what are we spotting on the charts?
Right, so if you can see the chart, we are seeing some historical pattern from last 3 sessions. We are seeing that Nifty has been facing strong selling pressure at around that 1:32 p.m. because of which Nifty has been closing below the midpoint, almost near the day's low. So if we see an up move today or flat, do stay cautious around that 1:30 to 2 p.m. Now, if we talk about index options, like you mentioned, today is weekly option expiry, so we may see some more volatility in the market. We are seeing call writing happening at 23,400 strike, indicating traders expect Nifty to take resistance around this level. Now let's see what FIs did in previous session. In index futures, they added around 15,000 long, but they covered around 2,600 short. Though the number is small, but this is the 6th session when we are seeing them covering their shorts. Now such 6-session streak was seen in mid-April of last year. Now at that time we saw Nifty falling by around 1% within 4 to 5 sessions, but after that we saw it recovering and giving an up move of around 13 to 15%, which is a very positive pattern for the market.
Well, absolutely, definitely a positive pattern indeed, Ansh. But while you're with us, channel checks suggest that wires and cables companies also took a price hike due to price fluctuations in raw materials as well, and it's also suggested that the demand is expected to rise post the election. So tell us about the takeaways of that as well.
Yes, that's right. Raw material prices for wire and cable have seen an uptick significantly. Copper prices have gone up by around 16% on quarter-on-quarter basis, and 17% to 18% actually on year-on-year basis in first quarter of FY25. Whereas aluminium prices have also seen an up move of 16% on quarter-on-quarter basis and over 14% on year basis for the same period. However, there has been a slight softness in last few sessions. Now, if you talk about customer preferences, then channel check indicate that customer actually prioritize brand loyalty over price when choosing wires and cables. Now, quality and on-time delivery is something which they prefer over price as well. Now, if you talk about companies, then Polycab is known for higher prices, but despite of this, it is preferred in industrial and commercial uses. This is mainly because of their ready inventory and financing option. Whereas if we talk about KEI, then it is more popular among building construction vertical in local market due to its lower pricing. But if you talk about Finolex, then it is the least preferred brand in Mumbai region, and this is because of their prepayment conditions and low availability of product. So the bottom line is that yes, wire and cable are facing some fluctuation in their raw material prices, but customers remain loyal to their brand they trust. Polycab leading the industrial sector, KEI is favored in building construction, but Finolex faces challenges.
Thanks so much for taking us through that. So the wires and cable space is going to be focused on the back of everything that Ansh has just told us. But let me take it across to my colleague Gaurav, who's now standing by and waiting to tell us all the stocks that brokerages are flagging off for us bright and early this morning. Good morning, Gaurav. Take it away.
Well, yes. First, let's begin with MTAR Tech because InCred has now initiated with ad rating and a target price of 2,644 rupees, which leaves a healthy upside of more than 45%. What they believe is that the PAT is expected to grow almost with a CAGR of 80% over the next 2 years. They believe that there is a rise in the fuel cell revolution, which will help the company. And on back of this news, they are also expecting 41% CAGR when we talk about top line, and we may also see margin expansion in terms of 500 basis points from here on. Next, let's talk about Varun Beverages because Morgan Stanley has now maintained their overweight rating with the target price of 1,701 rupees. What they believe is that the near-term demand was seen because of the heat wave that we all experienced. Apart from that, the company is seeing more opportunities from businesses from Africa. And lastly, there are no further equity fundraise plans from the company, which is actually a positive trigger as per Morgan Stanley. Next, let's talk about IIFL Finance because Jefferies has now maintained hold rating with the target price of 465 rupees. What they believe is that RBI's resolution and the special audit has actually concluded before what the street was expecting, and this makes a case that there is a probability of early resolution on the ban of the certain products that the RBI had implemented earlier. Lastly, they are also estimating some muted growth because we may see some time for IIFL Finance to pick up post even if the ban is removed or revoked. And lastly, they see downside risk on the valuation from here on, and that is why they are maintaining hold rating with a target price of 465 rupees. And lastly, let's talk about L&T because Goldman Sachs has now maintained buy rating with a target price of 3,600 rupees, and this is the reason being that the company is very optimistic. They have actually reiterated their target to meet the 10% growth in terms of order inflow. The order pipeline is also strong with hydrocarbons and infrastructure segment. Lastly, if we talk about the execution cycle is improving. There was a slowdown when we talk about the time period, specifically about when the elections were there, but now they believe that now that the elections are over and the government continuity is going to remain, they believe that the order inflow is expected to stay strong. And on back of this news, Goldman Sachs is also being bullish on L&T. So definitely watching out on all these stocks because a strong word is coming up from brokerages on all these stocks.
Well, absolutely, Gaurav. That's a strong word coming in from the brokerages on those counters. Thank you so much for getting us that snapshot. But let's keep it going with brokerages then. And B&K Securities has initiated coverage on a couple of counters. So Viniti Organics as well as Archean Chemical is what they're looking at. And especially when you take a look at Archean Chemical, they see an upside of 39% to that target price. Let's also take a look at Vinti Organics and what they had to say about the company then. And they're talking about how the foray into antioxidants is an important opportunity that they're flagging, and as well as the strong market position as well as robust growth potential is something that they're highlighting as well. When it comes to Vinti Organics, let's also switch focus to Archean Chemical and see what they have to say about that as well, because they're seeing the company ascending the ladder of bromine's value chain as well. And in terms of return ratios, they're highlighting that return ratios for the company are also stronger versus peers. So that's the initiation note coming in on those chemical companies. But let's also switch focus to a note coming in on Mankind Pharma because MOSL has initiated a buy with a target at 2,650. They're talking about how the company is working on multiple levers to boost growth as well over 3 to 5 years. They're also talking about how the company is increasing the scope of business in chronic therapies as well as enhancing presence in metro cities. So that is something that they're highlighting. And lastly, in terms of the earnings CAGR, they're expecting 16% earnings CAGR over financial year 24 to 27. So that is that initiation note coming in on Mankind Pharma from MOSL Snehi. So those are the ones that I was keeping an eye on.
Well, absolutely, and I'm going to talk about a stock from a sector that I track very closely. That's the real estate space, and the stock that I'm going to talk about is Soba. That stock is going to be in focus today on the back of a rights issue that the board has approved. They've given the board nod to raise up to 2,000 crore rupees via this rights issue. Lots to watch out for when it comes to this rights issue because the price band has been set at 1,651 rupees per share, which comes at a steep 20% discount compared to where Soba closed yesterday at 2,070 rupees per share. The issuance is going to be of 12.1 million shares, which is going to bring down the equity dilution to 11.3%, assuming that the entire rights issue has been subscribed to. Let's understand why this rights issue is taking place in the first place. The rationale behind this is for debt repayment and prepayment purposes. The company also wants to fund ongoing as well as upcoming projects, and they're also talking about buying equipment, machinery, and also funding acquisition of unidentified land parcels, and of course for general corporate purposes as well. Let me take you through what this rights issue is structured to look like? Now, out of that 1,651 rupees per share of the subscription price, 825.5, which is 50% of that price, needs to be paid on application to the rights issue. The remaining 50% has to be paid in not more than 2 subsequent calls, and this has to be completed on or before 31st December 2025. So they've structured the rights issue in such a way that their payments or the funds that they receive are spaced out over a time frame till 31st December of 2025. Now let's talk about what the ratio looks like. 6 equity shares for every 47 fully paid up shares held by eligible shareholders is what the rights issue ratio is. And to determine who falls under this eligible shareholders, the record date for the rights issue has been fixed at 19th June of this year. Now lastly, important dates to watch out for when it comes to this rights issue. The issue is opening on 28 June 2024 and closing on the 4th of July of this year. So specifically watch out for SOBA in today's trading session on the back of the announcement of this rights issue.
Well, absolutely. And as we wind down, let's get you some important commentary coming in as well. On the sidelines of the India Investment Forum, we also caught up with Jonathan Garner, who's the Chief Asia EM Equity Strategist at Morgan Stanley. Listen in to what he had to say about how he sees India stacking up versus its peers.
I wouldn't read too much into the fact that FII flows are moderately negative. I think the support from the domestic investor is important in India, but we're also likely to get structural upweighting in India by truly global funds over the next couple of years, now that India's weight in the EM index and global equities has risen so much. It's really quite a dramatic increase in weight. So those truly global investors are likely to be coming to India and buying, their first or second stock over the next couple of years. We have the deflation of the property bubble in China, which is what's depressing corporate earnings. So yes, positioning was extremely negative on China in, let's say, mid-March. We had a counter-trend rally. It's important to notice also that the beta, or the volatility, of the China market is systematically increasing as the fundamentals have weakened, whereas the volatility of the Indian market, if you just take aside the election day itself, which is obviously a unique event, the election results announcement, but in general, the beta of the Indian market has reduced, which is a characteristic of a secular bull market. So what we think is happening here in the last 2 weeks is that the secular bull trend in India is significantly reasserting itself, whereas the bear trend in China is again pushing that market down.
All right, well, let's shift focus away from the markets and let's take a look at everything else that's been happening outside of the world of equity markets. First up, let's talk about politics. And BJP leader Pema Khandu is all set to become the Chief Minister of Arunachal Pradesh for the 3rd term in a row after he was unanimously elected as the BJP legislature party leader. The swearing-in ceremony will be held later today and top BJP leaders, including Amit Shah and JP Nadda, will attend the ceremony. Moving on then, all 4 gates of the Puri Jagannath temple will be open for devotees in the presence of CM Mohan Charan Majhi and Deputy Chief Ministers KV Singh Dev and Prabhati Parida. The CM and the other cabinet ministers will also offer prayers at the Lord Jagannath temple and seek blessings before they take charge.
Well, absolutely, and let's shift focus away from that then. And workers fired by SpaceX have filed a lawsuit accusing Elon Musk of fostering a sexist, dark ages culture at the company. The suit charges Musk and SpaceX with sexual harassment, discrimination, retaliation, as well as wrongful termination. And in their complaints, the engineers describe a sexist corporate culture where sexual comments and other forms of harassment were tolerated or made light of. Moving focus to the world of sports then, and India stormed into the Super 8 stage of the ICC T20 Cricket World Cup after outclassing a spirited USA. India's left-arm pacer Arshdeep Singh scalped 4 wickets to register India's best ever T20 World Cup bowling performance, while Surya Kumar Yadav's unbeaten half-century also helped India chase down the target of 111 runs. So that's good news coming in for us.
Well, absolutely. It was an interesting match to watch yesterday. But viewers, on this note, I'm afraid we're completely timed out on this edition of Market Cafe. From Shreyansi, me and the entire team that put this show together, thanks so much for watching. But as we bid you goodbye, you still stay tuned to the channel because the market takes all the action ahead.
Great news for those who want to rise with India. Now you can get the full